All right, guys. Good morning. Good morning. It is Wednesday. We actually got a bunch of stuff happening today. Pretty busy. It is Wednesday. We actually got a bunch of stuff happening today. Let me mute that. Hold on. Yeah, markets are down yesterday. NVIDIA was basically at 153s. It's down $13 a share. Yeah. So yeah. So from 153 down to 140 is almost 9% drop, 8.5% drop for NVIDIA. That's a big drop, man. Interesting. The Q also dipped yesterday. Honestly, we had some beautiful trades, though. We really did. If you guys saw me on Topstep TV, dude, honestly, I've never thought about trading at the end of the day, but I might start, to be completely honest, because if anybody's watched, like, my last, the Q is down 2.5%. If anybody's watched my last couple appearances on Topstep TV, dude, I have just been on point. Like, everything I've said in my trade ideas have turned out to be correct. And honestly, I think I'm getting a little lucky. But I might start trading in the afternoon. Like, what I've been doing is I've been creating longer term trades using levels, right? Using levels, momentum, trend, and it's worked really, really well. And so it honestly has me rethinking. I made $200 and something yesterday. I think I made around at least 200. I might be off with that. Let me see how much I made yesterday. But it was a beautiful trade, man. Beautiful trade. I ended up making yeah. So I ended up making, actually I didn't quite make 200. I made $190 yesterday, roughly 190 bucks, which is good. Yeah, I'll take it. And honestly, it has me rethinking my strategies. Where's Palantir? Let me see him buy Palantir. Gold, kind of flat. NVIDIA is the big weak one though. Here's Palantir. And then today we got prelim non-farm payroll data. We got the Fed minutes report later. We got jobless claims unemployment at 8:13. So remember, prelim NFP data is at 8:15 market time, Chad. So it's at 8:15 market time for prelim NFP data. That's in about an hour. We'll put a timer up. It is, so yeah. This will be in about 55.5 minutes. Right? Yep, that's about right. That's good enough. I'm sure my timer's slightly off, but hey, there's the timer. I'm wondering if I should change my title to what's up, Coffee Pawn, K, Biggie, Beach Bum, Eric, Ray, Harris, Cartman, Kurt, Old, Pawn. What's up, guys? Yeah, so I wonder if I should change my title. Well, I took my blood sugar today, and my blood sugar is back down to like 90 fasting, which is good. Right, I still got a long ways to go, but I've been eating junk. Yeah. What's up, Harris? Type 2? Yeah, my cousin's type 2. My cousin has type 2. Type 2 is the juvenile one, right? One of them happens as you get older from eating too much sugar. The other one basically is just kind of... One's genetic. Yeah, so type 1. My cousin has type 1. Type 1, yeah, juvenile diabetes. My cousin has that one, and he's had it his whole life. And yeah, like my blood sugar's not bad, but it's kind of like, I've given up sugar the last like week, right? I haven't eaten any sugar. Not any, like, I've eaten sugar, don't get me wrong, there's sugar in everything, to be honest. But I haven't eaten sweets. Like, usually one of my kryptonites is like cookies and milk or ice cream. And I always assume, like, I'm pretty active, dude. Like, I train jujitsu multiple times a week. I go to the gym, at least a couple times a week usually. And so that's a lot of exercise, to be honest. Like, jujitsu and the gym multiple times a week, that's a lot of exercise. So I always assumed I was good because I exercised enough. But then I took my blood sugar, and it was like 115 one morning, which is like pre-diabetes range. And so I freaked out and basically gave up all processed sugar. And now it's back down to normal in about a week of giving it up. So I think I'll stick with it. Aside from special occasions, like we got a special occasion. Yesterday was my son's birthday. I still didn't eat. He had fried Oreos for his big birthday meal. Yeah, for sure. I'm glad we're getting new buying opportunities. I don't know if it's time to buy right now, though. Like, I think we might be due for a larger correction. I might be wrong. I don't know. This is one of those things where, to be honest, there's more edge in buying than shorting. Because, even if you buy here and you're wrong, you'll still have time. Like, markets are going to go up long term. And so you'll still be okay long term, and who knows how long that might take, but you'll still be okay if you can wait long enough. Versus shorting, where if you're wrong, you're just freaking wrong. But I do think we need a correction, and I think, I think if we do get one, maybe it's going to be earnings season this year. We got earnings season. I think at the end, I would watch the end of this month for a correction. I'm not saying we're going to, but it's just kind of like a correction watch. Like I'm watching for one. I'm not predicting one. I'm just kind of, it's kind of like, I'm just watching to see if we get one. And typically when I'm looking for this stuff, I'm looking for the most volatile points, right? And so at the end of this month, we have the Fed decision. It's going to be a pause, at least unless economic data sways it one way or the other way over the next couple weeks. At the end of this month, we get a pause. We also have like Tesla earnings, Apple earnings, Amazon earnings, Meta earnings, Microsoft earnings, Google earnings. Like we got a bunch of big tech earnings that influence markets. We've got the Fed meeting, and we've got economic data coming out. So I'm watching the end of this month to see if we start to correct a little bit. Now, it's not really common for us to correct in January, to be honest. Let me look this up. This is where AI is really useful because all right. September is the worst month. Crashes, stuff like that. October, Black Monday, 2008 financial crisis also started in October. January effect sees gains, usually due to what's called the January effect, where stocks tend to rise as investors reinvest cash for the new year. It can also bring corrections, though, if expectations for the year fail to materialize. In 2016, the S&P fell 6% in January, driven by oil price crashes and global growth fears. May, there's a very famous quote called "Sell in May, go away." March can have corrections as well. Basically, okay, they're just throwing out every freaking month here now. So again, in summary, the three most probable months for a market correction or crash are September, October, January, May, March, and August. which is half the months. So, but yeah, I'm looking at the end of this month, to be honest. It's earnings season starting. We got like big bank earnings. Let me see. We got big bank earnings coming out sometime. Yeah, let me see. JP Morgan, Bank of America, and all that stuff start to release their earnings mid this month, January 15th. Now, that is something so that's in exactly a week from now. So in exactly a week from now, we got JP Morgan, Wells Fargo, Bank of America earnings. And so that's something to watch too. And we're going to cover it like we always do, of course. But yeah, just be ready. All right. Yeah, look at Tesla. Tesla all the way back down to the 380s. That's a shock. Palantir finally coming back down a little bit. It kind of needed to correct some. Here's Tesla. Tesla correcting some. So we do have a little correction. I kind of told you guys I thought we would. How much have we corrected so far versus the top? Because I told you guys I thought we might correct a little bit. And I think I told you guys that I think we could correct some right around here. And so since that, we have had some downward movement here on a percentage basis overall, though, from the recent tops in early to mid, the 512s. Yeah, so the Q has dropped about 5%, a little bit less than that since I said we might correct some. So far, we've been okay about my correction prediction here. I haven't really started to buy up anything, though. And I don't know if this is going to be a longer sustained correction or, a huge one. Catch back up. See a lot of comments. Market's in a downtrend. Yeah, for sure. A freshly squeezed lemon and lukewarm water every morning does wonders for you. Yeah. I think we're going to pull back a little more. We have needed a correction for 24 months. No, we haven't. Look, 2 years ago, we didn't need a correction. Right? Like, that's just people over predicting crashes, right? Like, people over predict crashes. They want to be like Michael Bray. I've been saying this for freaking 3, 4, 5 years now. People wildly over predict crashes. 2 years ago, we certainly weren't in a situation where we needed to correct. Now, the last 2 years, right? Like, when the market does like 10, 15, 20% in a year, that doesn't mean it needs to correct. That's a normal year for the market, right? And that's where a lot of people get it wrong, where they're looking at a 10%, 15% year and they're saying, oh, we just have to correct. It's like, no, we don't. At this point in time, though, the NASDAQ specifically is up 105%, or it was up 105% in 2 years. That's different. That's averaging 50% plus a year. That's a huge, huge year for a couple year period for markets. That's a little bit more understandable about needing to correct back down a little bit. But the question is, how much do we need to correct? I don't freaking know. I think nobody knows. We could correct big, small. Nobody really knows. NASDAQ has corrected about 5% so far from its highs at 540. I don't know what we're going to do now. Dollar deficit, 10-year yield went crazy again. Well, 10-year yield's going to go down as interest rates go down, right? So if you look at like TNX, if you look at the TNX symbol, it's up because they think interest rates, this is why it's very easy to predict why TNX is up though, Liddy. TNX, which is 10-year yields, is up because the JOLTS report came in much higher than expected. as well as what else? As well as services PMI yesterday came in noticeably higher than expected. And so both of those things showed a stronger economy than expected. And what does the Federal Reserve do when the economy is stronger than expected? It keeps interest rates high because it doesn't need to lower them to save us from a weak economy, right? So it keeps interest rates high, and 10-year yields follow interest rates. So if interest rates are theorized to be high, what's going to happen to the 10-year yields? They're going to spike up like they did yesterday. You know, that's not a shock. That's pretty predictable, to be honest. Still trying to catch up. Yeah, I've heard about the lemon thing before stuff. Bro, your audio is coming out of the left side only. Can you fix it, please? I'm not sure. I got to hear that from everybody else first. Do y'all only hear me on the left side? I'm a bear, noticeably releasing. People worried inflation coming back again. Yeah. Nice, Matt. I hear you in the back. Okay, good. I love shorting days. Honestly, though, dude, so I'm going to change my whole system, I think, around after yesterday. Like, I've been on Topstep TV, and it kind of goes to show I can trade well when I want to trade well. I think I'm getting lost too much in the opening volatility. And so what I might do is I might stream a little bit longer. I might trade a little bit less and try to really maximize some of those gains, because I think some of my, like, the thesis I had yesterday played out perfectly. And, you know, like, I've been on Topstep TV a couple times. Yesterday, I was talking to Dolby. I was like, hey, I think a short looks good here. I like a short down to that low of today. This is my risk level. And I think it's going to come back here to kind of retest this low. And then it did exactly that. Like, it literally did exactly what I said it would to a T. And then, honestly, afterwards, he asked me, too. He was like, hey, which way are you going? Which way would you go here? And I told him I didn't want to take a trade because I wasn't quite sure, but I thought that the momentum was on the downside, and if I had to pick a direction, it would be down. And then the market ended up breaking lows and continuing down. So it gave me a lot of confidence, to be honest, enough to where I'm going to really look at my system. And I might start trading in the afternoon, too, honestly, after those last couple of runs. Yeah, I might trade in the afternoons. It was cool. Fubo is dumping. Quantum computing threatens NVIDIA. I mean, it does, because it serves, like, if quantum takes off, you're not going to need powerful microchips as much in the same way. At least you'll still might need them for, like, that type of stuff, but it's not going to be in the same way. Yeah, so quantum computing poses a bunch of risks to microchips due to its potential to disrupt existing tech and computational processes. Quantum computers are still in their early stages. Their development could impact future semiconductors, though classical chips could be rendered obsolete. So obsolescence of classical chips, quantum computers can solve certain types of problems exponentially faster than classical computers. Classic computers, tasks like cryptography, optimization, large-scale simulation currently performed by classical microchips could shift to quantum systems. As quantum computing matures, it may reduce demand for traditional processors, GPUs, and FPGAs, field programmable gate arrays. Quantum systems rely on qubits, which require entirely different architecture compared to classic chips like the ones that NVIDIA and AMD and stuff like that use. Quantum systems rely on qubits, different architecture. Microchip manufacturers may struggle to adapt. So that's a big pose risk here. IBM Quantum Systems. So IBM offers access to its quantum computers through IBM Quantum Experience via the cloud. So the price right now for a quantum computer is roughly 5 to 15 million for the physical setup. D-Wave quantum annealers price starts at 10 to 15 million for on-premise installation. IONQ systems price is about 5 to 10 million. Rigetti computing systems start at 5 million or more for custom setups. Now here's the thing though. So now you can use desktop size quantum simulators. But here's the thing, right? So, okay. How are people using this for crypto mining? Wouldn't they be able to mine Bitcoin much faster? And so they could essentially just mine all the rest. They're not yet practical for Bitcoin mining and other cryptos. Yes, in theory, quantum computers could mine Bitcoin faster than classic ones due to their ability to solve problems. Okay, so actually, never mind. So currently there's too few qubits on quantum computers. Existing ones have about 50 to 1,000 qubits, while thousands to millions of qubits are likely needed to crack it. Plus, they're kind of unstable and they're prone to errors, and they cost millions. So yeah, but once they get more efficient, it's going to be an interesting time. So this is an NFP. This is prelim NFP data, right? So today we have prelim NFP data called the non-farm employment change. It drops at 8:15 in about 36 minutes. We also have jobless claims unemployment data coming out today. We also have the Fed minutes report at 2. So, all right. So Jensen Huang put out a statement. Let's take a look. So Jensen Huang put out a statement about quantum. He said late on Tuesday that he didn't expect the technology to be in widespread use for decades. Yeah. What would you do if you're him? What would you do if you're him? All right, guys. So, who do you guys think is going to get to the Future Bowl? We got Josh Allen and the Bills, wild card round on the 12th. We got the Texans and the Chargers, man. I'm for the Texans. I hope they do it good. We got Jalen Hurts and the Eagles versus Aaron Rodgers and Aaron Rodgers is with the Jets now. Eagles QB still hurt. I haven't been paying attention to football this year. Honestly, I haven't been watching the main year for football. I watched the playoffs, though. Jalen's hurt. That statement is why quantum dumps. Yeah. Do you think NVIDIA would purchase a quantum chip company if they were a threat? Yes. I think they have enough money to, and I absolutely think they would buy into it like that. 100%. The 10 a.m. rule? What do you mean? Wait to trade until after 10 a.m.? I shorted 100K 3 times and I profited a lot. It's like the old 70K Bitcoin. Yeah, I mean, I told people this. I thought Bitcoin would consolidate in the 90s for a while. I've been correct so far. Yeah, we're going to go. Okay, so somebody asked me to go over the possible reactions to today's data. So non-farm employment change, prelim NFP data, higher's worse, lower's better, right? But at the same time, we don't really know. According to yesterday's data, higher economic data is worse, right? Stronger economy is worse. Why is it worse? It's a little nuanced, but the reason it's worse is mostly because number one, investors, traders alike, they want lower interest rates, right? Lower interest rates is better for them in their mind, and so they want lower interest rates, and they also fear inflation. And so when we have stronger economic data, what does it signal? It means less of a need to cut rates. It means more potential inflation problems. And when we have stuff like the JOLTS report that came out yesterday, the JOLTS job report dropped yesterday. The market did not like it at all, and that's one of the reasons the market dropped all day yesterday. The JOLTS report came out higher than expected, stronger than expected. ISM services came out stronger, higher than expected, and this made market negatively react. It made them panic, and so we are in a situation where bad is good and good is bad, at least the last couple economic reports. Now, I'm going to take that context into today's reports and maybe think the same thing, although you never freaking know. Nothing's definitive or super predictable. We could always go the other way and do the opposite of what we did yesterday. It's very possible to do. We could have also dropped yesterday. Another reason is potentially just because NVIDIA and the rest of the market was up big at the open yesterday from the CES NVIDIA conference. And so we could have dropped yesterday as a mix of just like profit taking from that big event and that big increase in price. Sellers took over to take profits, and that's plausible, I think, as well. And that's what we talked about yesterday too. But with that said, I think higher prelim NFP data might make the market panic. And I think lower jobless claims numbers could do the same thing, although jobless claims is a little bit different. What you really want to pay attention to is the Fed minutes report, the FOMC minutes report this afternoon. We're going to stream it all live as it happens, so that'll be a fun report to cover. And then remember, the market is closed tomorrow. Market is closed tomorrow. Yeah, but of course Jensen's going to downplay quantum technologies. Why is Jensen going to downplay it? Because quantum technologies are the biggest future threat to NVIDIA, right? So that's kind of like saying, it's kind of like Netscape downplaying Microsoft browsers, right? Like, of course they are. That's their biggest competitor. Like, that's their biggest risk, you know? So, of course, they're going to say, oh, don't worry about that. You don't have to worry about that. But I think you don't have to worry about them right now. I think you got to worry about them in the next 5 to 10 years, you know. And NVIDIA needs to start making preparations for that now, because that's a risk, 100%, without question. You know, when you're a billionaire like Jensen, you have to start looking at all the angles and preparing yourself for the future, you know, swings and things. And so I think that's what he's doing. I think he certainly recognizes the threat of future quantum computers. Right now, it's not really there, but in the future, they could render a lot of different technologies, especially in hardware, software, all kind of stuff obsolete. Not software, but a lot of hardware things obsolete if they really make it efficient and cheap. Yeah, I think the risk of cryptos, number one, a lot of the algorithms might break from quantum computers, right? Once they get efficient. We're not really there yet, but in the future, a lot of the algorithms could break. Not only that, but if quantum computing get powerful enough and cheap enough, people are going to start using them to mine Bitcoin, because at this point Bitcoin is essentially a guessing game where you're mining Bitcoin, trying to guess the different strings of code or whatever. And you know, when you guess one correctly, boom, you mine a Bitcoin or whatever it is, or you mine some Bitcoin. And so with that in mind, right, quantum computing, once it gets better, could certainly guess faster and compute that stuff faster than current computers. And if it gets to a point of efficiency, we could get to a situation where the richest people that are able to afford quantum computers are able to just mine all the Bitcoin, and that poses risk to it for sure as well. We're not really there yet. We still got a long way to go, though. But it's certainly something you want to pay attention to in the future as well. This is over the next 5-10 years. All right. Robinhood stock. So a big Wall Street bear is finally deciding to get out of his Robinhood shorts after a 260% run. Ken Worthington is a JP Morgan analyst, upgraded his rating on Robinhood shares to neutral from underweight on Tuesday. He held that rating on the stock since the trading platform's IPO in July of 2021. Yeah, I mean, I think one thing that's helping Robinhood is just moving away from the controversy of the AMC GameStop craziness that happened, specifically GameStop more than anything. But I think moving away from that is benefiting Robinhood because they needed to. That was a big scandal, a big scandal. So we have prelim non-farm data in about 30 minutes, right at 8:15 market time. So in about 30 minutes, we got prelim non-farm data. At 8:30. We have jobless claims unemployment data. So, yeah, we got a couple strings of data. One's at 8:15, one's at 8:30. So I got a new mic here, guys. Oh, my mother-in-law got me a new mic. Let me pull this thing out. Now, I don't know much about microphones. And I know we're gonna have some people that are like, "Oh, bro, your current microphone is good enough." But she got me this one, which is like a podcast mic. I have no idea how to do this though. I have to get this set up. Where's the rest of it? It's got 3 prongs in it, which is a little bit different, man. This is like a studio mic, which is cool. Yeah, I don't know. Here, hold on, guys. I'll have to fidget with this later. Because yeah, I'll have to mess with it later, guys. Because I don't know where the cords and stuff are from, and I'll have to find them. Oh well. How good is this mic? Sound could be better, louder. From a technical standpoint, you think Fubo TV will keep on running, even if you have seen that? I mean, it got bought out by Hulu, right? So Fubo got bought out by Hulu, right? So I don't think it's going to keep running. I think it's probably just up from the buyout, and it might actually correct. I don't know, though. It has dipped a little bit down from it. Morning, brother. I have a question. What's the first part of your question? You said, good morning, brother, I have a question. And then the second part was, or continue using 2% and keep my stop at always 10%. I think your first part of your question didn't go through, bro. The main reason the market fell yesterday was stagflation. Well, stagflation is a sign of higher unemployment, weak economy, but also high inflation. Right, which are kind of contradictory things. You like a strong economy usually contributes to high inflation, not a weak economy. So I don't think we're in stagflation. I think, you know, inflation's not high right now, right? Like if we look at the last CPI reading as an example, last CPI report came in at what? We're at like Here, let me see. We got CPI next week. Let me see what we show. So yeah, so CPI showed up last time. Next week is CPI on Wednesday, I believe we have CPI. So yeah, CPI showed up last time at how do I look at the expected number? Or is this just the last time number? Okay, yeah. So last time CPI showed up at 2.7%, right? Like that's not high. Like, and again, when I say this, like people that don't understand what I'm saying are like, oh, have you seen prices lately? And it's like, yeah, prices are up. They don't go back down. But the rise of inflation is not high right now. It's not crazy. It's at 2.7%, which is relatively low, right? Like it's not crazy high. An example of this is like after 2022, inflation CPI got up to almost 10% year over year. So yeah, we're just not super high for inflation right now to signal stagflation. I'm not seeing it, at least. No, I'm not saying that we're in stagflation. The market fears that the tariffs will raise prices. Okay, yeah, that makes sense. My bad, Q. I got you. Okay, yeah, future concern. Yeah, that's plausible. But I think you also have to understand, right? Like the markets bounced a lot after the president-elect basically clarified and said that they were only going to do tariffs on the largest imports, not like as aggressive as they once thought. And the market actually bounced back earlier in the week because of that, right? On Monday, I believe, the market bounced back after somebody stated that they were only going to do tariffs on the largest imports. And so that's one of the things that, like, the tariff news is really kind of messing with markets, I think, a little bit. Most of this reaction, though, in markets is due to a mix of NVIDIA's CES event yesterday or the day before. That mixed with the JOLTS report, mixed with ISM services, mixed with some Fed speakers, right? Like all these things are kind of causing some volatility in markets where we're going up big and down big and all that stuff. Yeah. Well, he's a politician. That's what politicians do, bro. It doesn't matter which side, whomever it is. Every single president does exactly the same thing, bro. It doesn't matter which side they're on. They say, hey, we're going to do all these things once I'm elected. And then once they're elected, crickets. Crickets. Again, I'm not saying all of them are like that. I'm not saying he's not going to do some of the stuff he said, right? And I'm not really, like, super partisan either way. I'm very neutral. I don't care about any of that stuff, to be honest. I just don't trust any politicians. I don't care who they are. But yeah, I mean, the water's wet, water's wet, guys. You seen the 10-year? Yeah, the 10-year is just up because we showed much stronger economic reports yesterday. JOLTS report higher than expected, signaling more economic growth. Services PMI stronger than expected, signaling a stronger services sector. A stronger economy from economic data means that the Fed is less likely to bring rates down more anytime soon, which is a hawkish stance, and yields follow interest rates, right? So if interest rates are expected to stay higher, yields are going to spike because yields and interest rates have a positive correlation. Yields and interest rates and yields have a positive correlation versus like bond prices and yields have a inverse correlation, but that's not a shock, right? It's from anytime you get stronger economic data that signals less need to cut rates, the 10-year is going to spike up a little bit. That's normal. It's best if we hit neutral numbers. Forecast not higher, not lower. Yeah, I mean, here's a good question. What do you guys fear right now? Do you fear economic weakness or do you fear inflation? To be completely honest, I fear inflation more than any of it. And so in that regard, I'm okay with getting lower numbers because I don't want to see inflation rise. I don't want to see inflation get any worse than it has been. Inflation has been a big part of life for U.S. citizens or U.S. people for the last 5 years, specifically driven by the massive inflation surges that we saw post 2020. You know, after 2020, the Fed stepped in and tried to save us from, you know, a recession or depression that came following 2020 and the worldwide disaster that it was. And so they stepped in, printed a bunch of money, sent out stimulus checks, stimulated the economy in a lot of ways, brought interest rates down. All of this stuff contributed to increased spending and more inflation. And so inflation following all that economic stimulus and quantitative easing and money printing and stimulus checks, inflation spiked up to like 10%, almost 10%. And so then Fed panicked and they took a restrictive approach following that, what's called a hawkish approach. And they started doing quantitative tightening, which is basically just letting your bond holdings mature and run off the Fed's balance sheet. They started raising interest rates through rate hikes, and they kept them high for a while, being really restrictive. We only recently started to go dovish. Was it September of last year? Something like that. It was only over the last like 4 or 5 months. And now we're in the period in which we've cut rates 3 times in a row. We've cut rates a full percentage point. Now we did 50 basis point cut, 25, 25. So we've cut it a full percentage point now. And now the likelihood for the next Fed meeting is that we're going to pause rates. We're not going to raise. We're not going to lower. We're just going to pause. That's what's pretty likely now, I think. Hey, thank you, Jay. Appreciate it. Thank you. Hey, what's up, Taker? Yeah, that's a good question. Here, let me do it. All right, so there you go. Vote on the poll. What do you feel more, inflation or economic weakness? Vote on the poll. The issue becomes getting prices of goods lowered. And that doesn't really happen. Not unless we enter a deep recession. The only way prices are literally going to go down is if we enter like some really deep recession. It's not very likely. And if it does happen, you're not really going to like that situation either, I think. He will start pressuring the Fed to drop interest rates below 3%. I mean, let's see where we're at now. I think we're at like what? We're at like 4.25 right now. 4 to 4.25, I think is where we're at. Yeah, let me see. So here's the Fed funds. So here's the federal funds rate, right? These are, remember, like this is the short-term interest rates. So these are the rates that banks charge each other to hold money and lend money overnight. Here's the last year. You know, yeah, we're about 4 to 4.5%. Yeah, so you're saying under 3%, below 3% would be another like 150 basis points right now. I don't know if that's how much we're going to cut this year. That's a lot. I don't know. Now, you got to remember, when I say interest rates, I'm not talking about mortgages. Mortgages are a little different, right? Like, mortgages tend to follow sentiment and like, interest rate sentiment and like, what future outlook for the economy looks like. That's kind of what influences mortgage rates. Look at the market pop here, guys, right at 8 a.m. Wow. What is this? All right, so the Fed Waller is speaking here. So Fed Waller says inflation will continue to make progress towards 2% and will support further cuts in 2025, but pace will depend on further inflation progress. I don't know if that's what's making the market pop up here, but what a pop. Look at this. Yeah, so this is Waller speaking right now, guys, pumping the market up a little bit here. I'll put this news up in chat. Look, so he said inflation's going to keep making progress and will support further cuts in 2025. Yeah, like basically what he's saying here, chat, is that if inflation's a problem, the Fed's not going to cut rates like that, you know, because it doesn't make sense to. The reason the Fed cuts rates is to save us from a weak economy. And if the economy's strong and you know, inflation poses risks, they're not going to cut rates like they want, or like you guys might want them to. If inflation's under control and the economy's showing weakness, that's when they're going to cut rates. Right, but look at this pump here. This is a bounce. We also have FDA fast track designation to Johnson & Johnson. So we do have FDA's fast track designation for Johnson & Johnson. Yes, below 3%. The president-elect is for only one thing, making the market go even higher regardless of the economy. Yeah, but bringing interest rates down to 3% or less would stimulate the economy and make the economy stronger. But it would also cause massive inflation risks, I should say. Not necessarily issues, but definitely risks. And the logic there is like, you bring interest rates down, people have cheaper access to leverage and money, and so they tend to spend more when they have cheaper access to leverage and money and buy more, essentially. And when people spend and buy more, economics 101, prices go up, you know, supply and demand. Yeah, look at that pop, though. Waller making the market pop. All right, guys, we got 11 minutes now until prelim NFP data. I'll put this up. So prelim NFP data drops at 8:15 a.m. chat. 8:15 a.m. Are we in sub only mode? I think we are, right? Yes, we are. You know, we've got noticeably less trolls since we started making chat sub only mode all day. Yeah. So Johnson & Johnson FDA fast track designation. Trust me, inflation will be dovish. So, do you mean inflation will be low? Low inflation is dovish. So, you think inflation will be lower, is what you're saying? It's a weird way to say it. What happened to the gold trolls? You never see them anymore? Oh, they'll show up. They show up during like Jerome Powell meetings. You know, my guess is like they're overseas. Like they're kind of overseas people, and so they're showing up during that. All right, chat, we got 10 minutes left until prelim NFP data drops. 10 minutes left. Good job keeping an objective view of the markets, no matter if it's going up or dumping. Yeah, I mean, oh, this is the weird song, bro. How dare they even include this song? This is the weirdest. Listen to the song right now, guys. Listen to the song. How can this even be a song? Who listens to it? It gives me a headache. It sounds like a chipmunk rave. What the heck is this? Like, how dare you even put that song out here? I can't stand it. I can't stand it. Yeah, Waller's speaking right now. Again, what Waller said is up in chat. He said that inflation will continue to make progress towards 2%, will further support cuts in 25, but pace will depend on further inflation progress, end quote, Fed Waller. So yeah, that's what popped the market up just now, for sure. All right, so I'm looking at votes. Most people agree with me. I fear inflation way more than economic weakness, right? Like, my business is not dependent on interest rates or loans, right? Or anything like that. Like, I don't need to get a job. I don't need hiring from somebody else, right, to influence my happiness or well-being. I'm much more concerned about inflation, right? I do not want to see prices rise more, and nobody else should either. Prices have gone up so much in 5 years after the 2020, stuff. Prices have gone up and they don't freaking go back down, and I say this every day, but it's absolutely true. A lot of people right now make 100K and they think they're hot stuff, but 100K is nothing right now. It's nothing. It's definitely not what it was 10 years ago. And so a lot of people walking around thinking they're hot stuff, making 100K. And I'm not attacking you. Listen, please don't get mad at me for saying this. You get some people that are just like, they feel personally attacked. I'm not attacking anybody here. I'm telling you, 100K is nothing right now, right? Not with how expensive things are. And so, and I don't want to see that continue to happen. I don't want to see that get worse. You know, if inflation continues to spiral out of control like it did like a few years ago, then we're going to be in a situation where 200K is not much, right? And then it's going to continue and continue. That's a fear of mine. I don't want to see it go up. That should be a fear of everybody here. Everybody here. And I would much rather see economic weakness, especially in a sustained like period of time when things are okay, than prices go up uncontrollably again. And so absolutely I fear inflation much more than economic weakness. I'd rather us go into a recession and see prices go down a little bit versus inflation spiking up 10% again. I mean, listen, don't get me wrong. 100K is good. You make 100K, you're probably fine. But it's still not, I don't want to see prices go up. Do we talk about stagflation now? No. Not until we see a big increase in inflation, I think, can we talk about stagflation. Again, to put it at home, stagflation means economic weakness and high inflation like simultaneously, right? So it's called stagflation. It's economic weakness, stagnant economy, high inflation, right? But we don't see high inflation. The last CPI report was 2.7%. I talked about this earlier. The last CPI report is 2.7%. It's not, inflation under 3% is not high. Now prices are up. Now, when I say prices have gone up so much, what I'm meaning is over the last 5 years, right? And so a lot of people don't realize inflation's not really a huge issue right now in terms of like the inflation rate, but we're still dealing with the consequences of the last 5 years because prices go up. We're talking about the rate at which prices increase, right? But once they go up, they don't go back down. So we're stuck with those numbers, right? So aside from food is a little bit more volatile. It's why you can look at like core inflation, but yeah, at the same time, though, the current inflation rate's 2.7. That's not super high. Would I like it to be lower? Sure, but at the same time, 2.7 is not alarming, I guess is the point. Maybe we're in the early stages of stagflation. I don't know, maybe. Europe has medical care, a lot of other... Yeah, no, I mean, listen, I'm not going to get too deep into politics. I mean, I'm a capitalist. Anybody that trades stocks, you're a capitalist, regardless of whether you want to be or not. That's number one. Number two, I'm okay with free healthcare to a certain extent, and I'm okay with free college as well, right? I think that's the standard of the rest of the world. We should probably use that. But I'm also a capitalist. Again, I don't go into politics because if I did, everybody would hate me. Both sides would dislike me. So I'm going to respectfully decline to talk about politics any further. I think 2 to 4%. Yeah, I mean, listen, I know the Fed's target for inflation is 2%, but if we're under 3, we're doing good, right? We're doing okay. I'm not going to say good because prices have gone up so much over 5 years, but we're not in emergency territory under 3%. We're just not. All right, guys, we got 4 minutes before non-farm employment. John for president, All right, guys. Ooh. Should not be for profit. What should not be for profit? Yeah, I'm already El Presidente. I'm going to change my name to El Presidente like Dave Portnoy. It's not when mortgage payments are over 5K monthly. Yeah, but you're looking at two different things, Mark. So you're looking at interest rates. You know, you're looking at interest rates, brother. Like, interest rates are high because, like, you're looking at two different things, right? Almost, you're looking at two contradictory things, right? Like, interest rates are going to get low if the economy shows weakness, right? If the economy shows strength, interest rates are going to be high to try to push down inflation, which is a consequence of a strong economy. So yeah, I mean, point is, you're not always going to have super low interest rates. And honestly, if you think the interest rates right now are like super high, they're not, right? If you look at average interest rates over the last, even like 30-year mortgage rates, you look at the average 30-year mortgage rate over the last like 30 years, we're right around average right now. People are just so used to like 3% that they've seen over the last like 10, 15 years that they think we're in some sky high territory for mortgages when we're really not. Like, we're really pretty low. We're not low, we're probably pretty average right now, but point is, we're not like crazy high like a lot of like lenders want you to believe. All right, guys, so here we go. We got non-farm employment change data. We had the 30-year rate come out today. Actually, it came in at 6.99%. All right, guys, so we're expecting about 140, anywhere between 135 and 140 for ADP non-farm employment change. This data drops in about 2 minutes here, chat. 2 minutes. Let's see what we get. We got about 2 minutes left. A little bit less than 2 minutes now, actually. So again, it's expected. I'm showing 139K, 136K expected. This drops in about 2 minutes. I'm going to pause this, and we'll put another timer up. Again, this drops in about 1.5 minutes. Hit the live button next to the play button. Make sure you're fully caught up on stream here, chat. Here we go. We got 1 minute left. 1 minute left. I'll put a timer up here, like an accurate timer. All right, make sure you hit the live button next to the play button. Make sure you're fully caught up on stream here, chat. Okay. This timer is actually pretty accurate here. Pretty accurate. We got about 40 seconds left. 40 seconds left until prelim NFP data comes out. About 40 seconds here. 40 seconds is expected at about 136. 136. Here we go. All right, guys, 20 seconds here, 20 seconds. Here we go, guys. Let's see how the market reacts to this. We got the Q up here. I'm going to put like gold up on the left side, or on the right side, I mean. All right, guys, 10 seconds, 10 seconds, a little bit less than that. I'm going to pause this. 5, 4, 3, 2, 1, and here it goes. Let's see what it gets. There's the report. 122,000, lower than expected. ADP non-farm employment change. 122K versus 139K expected. This is good. This is weaker employment numbers than expected. 139 or 122 versus 139 to 140 expected. Again, 122K. Market didn't really react to prelim data here. I guess it's waiting on jobless claims now. Market's up a little bit on this report. Look at this. The market popped a little bit. NVIDIA up too. So again, 122 versus 140 expected, basically. 122 versus 140 expected. I'll put this data up on screen now. We also have jobless claims coming out in about 15 minutes. 15 minutes. We'll put this timer up now as well. We got jobless claims dropping in about 15 minutes. Yeah. So again, 122. Initially a positive reaction, and then we got jobless claims coming out here. All right, guys, jobless claims, unemployment data. $8:30 a.m. But yeah, here, I'll put this data up on screen, the prelim NFP data. All right, jobless claims unemployment data, 8:30. It's expected at 2:14. All right, guys, so we got this up on screen here. I'll make this a little bit smaller now that you can see all of it, but here we go. So we got about 13 minutes left. Market popped up a little bit. NVIDIA bounced up some as well. And we're also kind of looking at gold. But this is better. I think now sometimes the actual payroll numbers in this can vary, though. So sometimes the payroll numbers in this can vary. Yeah, it's certainly not stagflation yet, guys. You know, like yesterday, like honestly, I swear, dude. Traders pick and choose so much, man. They really do, guys. Like, come on now. Like, what I mean by this is that, look, here, let me minimize this a little bit. Like, y'all gotta stop picking and choosing what you want to be there. Because, like, listen, guys. Yesterday, the JOLTS report showed noticeably stronger data than expected. Like, noticeably stronger data than expected on the JOLTS report. You know what I mean? So, like, if the JOLTS report showed noticeably stronger data here, yeah, that's better. You know, we're not in stagflation because of one prelim NFP report. It just doesn't make any sense. Like, to be honest, it just doesn't make that, like, sense like that. And so, again, we're still very early, guys, very early. And yesterday's JOLTS report showed a stronger, like, economy than expected, not a weaker one. And I would say the JOLTS report is a little bit more influential than prelim NFP data. And so we're just not there yet to be yelling stagflation. We're just not there. Yeah, you can see the number at the top of the screen. Again, we got jobless claims unemployment data coming out at 214 today, 214. It's hard to pay a $500,000 mortgage with 6 to 7% interest. Yeah, 100%. But that means you probably shouldn't be buying a $500K mortgage if it's hard to pay. No offense. You know, like, people got to live within their means. You know what I mean? Like, and again, I've seen this as a problem, right? Like, I knew a couple different people that were lenders, right? And they made a bunch of money following 2020 when economic stimulus was happening and interest rates were super low at, like, freaking almost zero. For the Fed rate was almost zero. They brought them down to almost zero. They stimulated the economy. I know a lot of them thrived because interest rates were so low. It was very easy to sell loans and mortgages and all that stuff. And they made a bunch of money. And then the Fed pivoted to high interest rates and raised interest rates and started taking liquidity away, doing quantitative passive QT and stuff like that. And then their business just fell off a cliff, right? And they're still pushing for high interest rates. Or they're still pushing for low rates. We want low rates. But low rates are not always sustainable. Like, I would love to have low interest rates all the time, but it's not something that we should see regularly, you know, if you fear inflation, I mean. And so I guess the overarching point I'm trying to make here, I'm going to bring this down to the bottom maybe. Yeah, I'm going to bring this down to the bottom and maybe, like, put myself up here. So I guess what I'm trying to say here is low interest rates are not always good, is what I'm trying to say. And I think we have to take it into that context. Like, it's still too early to be yelling stagflation. Like, listen, if we get a high inflation number and a weak labor report, sure, you can yell stagflation, but we're not there yet, I think, right? I did a poll, 63% of people fear inflation. What is stagflation? Stagflation is a weak economy and high inflation simultaneously. But again, the JOLTS report is an example. Look at gold break highs. The JOLTS report is an example. Came in higher than expected. Services PMI yesterday came in higher than expected, right? And so the chat's funny because it's like we could have a high JOLTS report, a high services report, show signs of a strong economy, and then we have a prelim NFP report and that is lower than expected. And no, stagflation. It's like, okay, guys. All right. Like, I get it, but no, not yet. Not yet. Yeah, live within your means. I don't know. Look, maybe we are in stagflation. I don't freaking know, right? I think it's too early to tell everybody that, though. I think I'll put it this way. I think I've seen a lot of people screaming stagflation off and on for the last 5 years straight. And we still haven't hit a recession, you know, and the reason they're screaming stagflation is because they're trying to imply that we're heading towards a recession. And I just don't see it yet. I just don't see it. You know, GDP's 3%. Unemployment is relatively low, under 4.5%. You know, I just don't see it. Like, inflation's under 3%. I just don't see it. Yeah, market's completely closed. Yeah, it's way too early to yell it. Yeah, no, people aren't living within their means for sure, Melody. And again, guys, we got 7 minutes until jobless claims unemployment filings come out. 7 minutes. But yeah, people just are not, unfortunately. It's how it goes, though. Yeah, it's just how it goes. And that's normal. Like, look, I can't judge. I'm just saying, like, if you mortgage a $500,000 house and then you have trouble paying it, why in the world are you buying a $500,000 house, bro? Like, you get a really nice house for like $350, right? And so, why mortgage a super expensive house like that? All right, guys, we got 7 minutes. Again, unemployment claims are expected to show up at 214K today. Also, guys, if you haven't already, check out Topstep. I had made a good bit on Topstep yesterday. There's no PDT rule in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are super similar to blue chip stock patterns, and there's no PDT restrictions in futures. It's where most pro day traders should be day trading, is the futures market. You can day trade the S&P, the Dow, like patterns are very similar. Here's the NASDAQ here. On Topstep, they give you a 50K demo for the base one. If you can make 3K without losing 2K following their rules and conditions, they fund you 50K with a 90% split, and you get to keep your first 10K in profit. So it's the best of both worlds. It's limited risk at $50 a month, basically, for the first one, for the base one. If you pass it, you get a 90% split, which is similar to funding your own account, and you get to keep your first 10K in profit. And so it's the best of both worlds. Limited risk, similar reward to funding your own account. Teaches you how to trade. It's a beautiful middle ground. Teaches you how to trade, less risk than losing thousands of dollars funding your own account. But you're still risking something. You still have to learn how to trade under pressure. And if you're a good enough trader, you can then withdraw once you're funded and build up profit and fund your own account. And they've paid out over 150 million, almost 200 million in the last 4 years. They fund thousands of traders. They're the most legit one in the world. And the big edge, guys, is that if you trade with them, use Topstep X because there's literally zero commission. And so you can trade micro contracts, trade small scale in and out of position. It's the biggest edge in funding, in my opinion, right now. And a great way to learn how to day trade. But again, if you want to check them out, they are an affiliate of mine. I am biased in their favor for sure. Definitely one of the top 3 most biased traders of all time ever in the world right now. Definitely top 3 most biased ever. They pay me money, so I'm biased. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. Do not copy me. I do trade off stream. I don't even claim to be a good trader. If you copy me, you'll probably lose. Here's the link if you want to check it out in chat, though. Again, great way to learn how to day trade with limited risk. Your risk on the base one's $50, and so you're still risking something, but you're not risking thousands like most new traders end up doing and just losing like I did in the beginning. So check it out. There's the link. We got 5 minutes left, chat. 5 minutes left before jobless claims unemployment. I made my cousin sell his house that he bought for $450K. Yeah, I mean, Flip, I've never seen you say anything ever, so I don't think we're gonna miss you too much, Flip. Good day to you, sir. Yeah, I'm definitely top 3 worst trader of all time ever in the world. Do not copy me. All right, guys. Hey, NVIDIA up to 142s right now. The Q is up to 515s. Gold is pumping up. We got jobless claims, unemployment filings in 4 minutes. Chat, 4 minutes. Yeah, I wonder what made him go. Was it telling everybody I'm the worst trader of all time ever in the world? I think that might have been it. Or was it telling people that I'm biased? You know? All right, gold up there to 2670s here. NASDAQ's strong. NASDAQ is technically green on the day now. It did react positively to prelim NFP data. So it did react positively to prelim NFP data. Yeah. NASDAQ super strong by MicroStrategy. I'm here because you're the top worst trader in the world, but the most honest. Definitely top 3 most honest ever in the world. I'm definitely one of the top 5 most humble people of all time, greatest ever. I'm the most handsome, at least the top 4.5 as well. All right, we got 2.5 minutes, chat. 2.5 minutes. We got about 3 minutes left to be exact, but my timer is actually pretty accurate now. Here we go. The market is closed tomorrow, guys. The market is closed tomorrow, chat. So we have no jobless claims tomorrow. Jobless claims numbers drop today at 8:30 Eastern Standard Time because the market is closed tomorrow for the day of mourning. So market is closed tomorrow. Jobless claims unemployment drop today, at least according to multiple different sources. You're so funny. Definitely top 3 funniest ever. I come here for the floating head, bro. Don't make me bust it out, dude. I gotta. Here, it's all right. Next time. All right, we got 2 minutes left. 2 minutes. Look at the NASDAQ pump up a little bit here, though, after these prelim NFP data. It's the day of mourning. Hey, guys, y'all are coming in literally a minute before economic data comes out. Y'all are going to have to wait. Huh?
It's just me.
Okay. Well, here, you're going to have to wait about 2 minutes, 3 minutes, bud. All right, here, I love you. Here, I'll give you a hug right now. I love you, dude. Have a good day, buddy. All right. All right, we got a minute and a half. Yeah, everything's closed tomorrow. Here, guys. Look, it's 8:30. Okay, you have to come do it like right now. Love you. Have a good day. All right, guys, we got 1 minute left. Man, my family has the worst timing ever, dude. Worst timing. Definitely top 3. Worst timing ever right now. Do we want to see higher or lower jobless claims numbers? I would argue right now the market wants weaker economy numbers because the market reacted really negatively to the JOLTS report. You know, so like yesterday's JOLTS numbers showed super weak reactions, and I would argue the market fears inflation and doesn't want higher numbers. All right, guys, we got 30 seconds left. All right, 20 seconds. Yeah. All right, guys, 10 seconds. Here we go. Let's see how the reaction we're going to get here. 10 seconds. 5 seconds. Jobless claims are out at 201K. They came out early at 201,000. They dropped like a little bit early. 201 here. Guys, 201K versus 214 expected. Lower claims than expected, showing a stronger economy. Less people filing for unemployment. They came in at 201,000 versus 214 expected. They showed up a little bit early here, guys. A little bit early. You're welcome. I covered them early. Again, 201 versus 214 expected. Continuing claims showed up at 1.867. 1.867 mil versus 1.87 mil expected. So lower everywhere universally here, showing a stronger economy, less people filing for unemployment than expected. I'll put this data up on screen now, but kind of strange. It showed up early. I've never seen that happen in the last like year straight. Never seen this happen before where they actually came in earlier than expected. Weird. But hey, that's all right. We'll put this up on screen now too. So now both of these numbers are, hold on, let me fix this. There we go. All right, so now both of these numbers are up. There's both numbers at the bottom right now. Market has kind of underwhelmingly reacted. Didn't really do much here on this report, so it hasn't really moved that much. But gold did react pretty negatively quickly from it. Kind of bounced back here. NVIDIA didn't really react either. The Q's right at the previous closing price, so right at that previous closing level. Yeah, market barely did anything on this report, which is weird. I don't think we have anything else going on today either. Oh, we got the Fed minutes report. I'm sorry. We got the Fed minutes report at 2. We're going to cover that for sure. Yeah. All right, look at NVIDIA pump up, Q's pushing up. It looks bullish here to me, personally. Again, jobless claims unemployment showing lower than expected, which means like less people file for unemployment the lower it is, right? The lower means less people filing for unemployment. Higher means more people filing for unemployment, i.e. a weaker economy. So again, this is what I'm saying. People yelling stagflation is way too premature here, all right? Again, just to put this into perspective here, chat, like let me break this down for you guys here. Over the last 24 hours, we have had four major economic reports. Four. Okay. JOLTS report, stronger than expected. Stronger economy than expected. ISM services, stronger services sector, stronger economy than expected. Jobless claims numbers, lower than expected, stronger economy than expected. And then we had prelim NFP data, which is probably the least important report versus all of these, right? Showed less payroll numbers than expected, right? So literally four major economic reports. The least important one showed a weaker economy. And just because 1 out of 4 reports showed a weaker economy, people are now yelling stagflation. It's nonsensical. It's just nonsensical here. And again, this is the problem, is you've got people that have, over the last 4 or 5 years, they have screamed market crash over and over and over and over again. And we haven't yet. And it's been years and years and years and years. And eventually we are going to correct. We are going to crash. But it doesn't mean they've been right? They've been pressuring people to sell, sensationalizing the market, making everybody panic, freak out. And then the market just rips up. And the people that miss out on those gains are people that are following them. Every other week they're posting a video saying this is going to crash the markets. And it never does. And so you got to start taking everything with a grain of salt here. You got to start understanding the context of it, which yelling fire gets views, right? But look at the actual, back test the accuracy of them and, start being a little bit more skeptical. Stagflation means high inflation in a weak economy. Right now, inflation's under 3%, and 3 out of 4 of the last economic reports showed strength. The market's actually reacting negatively here, just like it did for JOLTS, because the market does not want a strong economy right now. The market wants lower interest rates, and they probably fear inflation to a certain extent. And so strong economic data, like the JOLTS report yesterday, made the market go down, and that's exactly what we're getting right now here. If you look up here, market's going down a little bit on the stronger economy reports. Why? Because they probably want lower interest rates and fear inflation. You keep saying we'll correct this year. I mean, markets will correct, not the economy. Maybe the economy does, but the markets and the economy are two different things. I don't know what it means. I think we need to drop at least 10%. Maybe more, but I think we need to come down at least 10%. We're down 5% now, right? And I've been saying we were going to correct this year since mid-December, and since then we've dropped about 5%, to be honest. I think we could still go down a little bit more. I'm not comfortable buying up here, but who freaking knows? And maybe we just rip up in my face as possible too. Or maybe we crash more than 10%. I don't know. Right now, a lot of things overpriced. Yeah, but if things are like, listen, when I say inflation, I mean the rate at which inflation is increasing. And right now that's under 3%, which is relatively good. It doesn't mean things are objectively cheap for everybody, because people are used to prices from 5 years ago, and we don't have those prices anymore, and they don't really go back down. And so people misunderstand when I say inflation is not bad. They think that means prices are back down to normal like they were, but the reality of it is prices are not actually going to go down. The best we can do is slow them down, which is kind of where we're at now at only 2.5%, 3%, if that makes sense. Mortgage rates are at 8%, sure, but again, there's yeah, I mean, I'm here to tell you I have no freaking idea what the market's gonna do, but I'm certainly not gonna tell you the market's about to crash, sell everything, and then when the market rips up 30%, blame it on manipulation. I'm definitely not gonna do that. Chronic bears are not eventually right, though, Pedro. So I'll put it this way, right? Chronic bulls are right eventually, right? Like if you sit in a long position on the S&P 500 long enough, you're going to be up, right? It'll prove you're right eventually. And that's why I like long. If you sit on a short position in the S&P 500, the longer you hold that short position, the less likely you are to make money, not the more likely, right? Even if we do eventually correct, I always try to give this example here on the Q, right? So here's the NASDAQ over the last few years, right? If you told everybody the market was going to crash here, and then we get up to this level and we crash down to here, were you right? Of course not. You thought we would crash here. We're still 50% higher than that. And so, yeah, it's not the same thing, right? Now, if you told everybody we were going to crash here and we go like this, then you could say we were right because we're below where you predicted it. But that's the point. Your record just seems good to me. Yeah, I've been pretty accurate about stuff. I really have. And again, one of the things that frustrates me is like, and I see what it is, right? Like you got movies like The Big Short come out and they romanticize making the next big market crash prediction. So you got all these freaking traders that romanticize that movie and romanticize picking the next big market crash and like all this stuff. And they romanticize Michael Burry. And so they start wildly over predicting crashes. Like, and they've been doing it for freaking 5 years now. And the market's just kind of up. And then when they're wrong, they scream manipulation. Where it's just kind of like, I think market crashes are just hard to predict. And I think they're so hard to predict that people make movies about them when they get it right, you know. And so I would rather, like, I don't want to influence my traders in that big way. I don't even know if we're going to correct. The biggest edge in the market is on the upside. And that's just objectively true. Looking at the biggest edge market ever gives you, which is S&P, NASDAQ, you're going to go up, 8 to 10% a year on average. And that's incredibly consistent over a century of data. That's the biggest edge in markets. But I'm not saying some people can't top pick the markets and short and make money. I'm not saying that's not true. Of course that's true. You always have outliers that can do things. But shorting the healthiest companies in the world and trying to predict market crashes, it just seems like a really low edge, low probability game that I'm not trying to play. Now, I might not be investing in stuff heavily right now because I'm worried about a correction. But there's a difference between that and aggressively attacking shorts in the healthiest companies in the world. I'm just not about that. That seems dumb to me. But everybody's different. Some people can do it successfully. The people that are going to do the best, in my opinion. Again, not an investment professional, not liable if you lose. Again, check out Topstep if you want to day trade with me. Honestly, I went on Topstep TV yesterday. We made a couple $100 yesterday. And again, this is my third time in a row going on Topstep TV and just absolutely nailing my predictions. Like, I literally called exactly what happened on the NQ. Like, if we put up the NQ here, like, dude, I got this exactly right yesterday. So, yesterday, we were trading this here. I think it was around here, right? So yesterday we were trading this. I told people I like to short. I think it was right around here at 450, 460. I got in short here. I told them I wanted those lows right around 400. And we literally went exactly down to that level. I used a risk level here. So a small risk, big reward, and just nailed it, right? And so again, in the futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. We ended up making a couple hundred yesterday. And again, Topstep gives you a demo. They test your skill with it. Shameless plug here, guys. This is a shameless plug. I get paid by them, so of course I'm biased. Top 3 most biased ever, some would say. But again, this makes sense. If you want to learn to day trade, do not fund your own account with thousands of dollars. You will almost certainly lose it. Instead, limit your risk with something like this. If you were going to pay for real-time data in a demo account in futures, it would cost about the same as a Topstep base combine, 50K combine. It's only $49. They give you a 50K demo. If you can make 3K in profit without losing 2K first, following their rules and conditions, a 2-to-3 ratio, they'll fund you 50K 90% split, and you get to keep your first 10K in profit. So that's similar to funding your own account, but the risk is $49. And so it's noticeably less risk versus risking thousands of dollars. It just doesn't make sense. Also, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold. If you put up NVIDIA and the NASDAQ, they're going to look similar a lot of the time. But you can day trade this with no PDT restrictions in the futures market. Topstep's the most legit in the world. They paid out over almost $200 million in the last 4 years. Fund thousands of traders, have been around for over 12 years. And again, the big edge is that there's zero commission on Topstep X specifically. So if you sign up using my link, use Topstep X, you'll get zero commissions, which is a powerful edge. In my opinion, the biggest edge in funding. But again, I am biased because I get paid by them. Some say the top 3 most biased trader ever. But if you want to check them out, there's the link. We're going to get ready to day trade here. I've been restricting myself. I've been restricting myself to only day trading after the market opens. Only day trading after the market opens. And that's treated me really well. I'm on a 3-day green streak after doing that. So we'll see if we can keep that up. But yeah, if you want to check them out, I'll put the link up here. Appreciate the love. Thanks so much. Great way to help support the channel. And if you want to check it out, here is the link. Yeah, Topstep's the most legit in the world. They really are, man. Honestly, I'm looking at this 200 exponential. I'm going to take one trade. One trade. Just one contract here. I'm going to make a vow. This is the only trade I'm getting in today. It's just a beautiful head and shoulders with the 200 exponential right above us here. So I'm going to make a vow. Only trade I'm getting involved with today. In pre-market, that is. In pre-market. I will trade after the bell. But in pre-market, this is the first and only trade I'm going to get involved with today. Just because we are literally right there. Head and shoulders. Right under the 200 exponential. And so my risk will be, we'll probably make a risk level of about this level here, 347s, 350. We'll make it 350, but the reward target's down here somewhere at about 305. So about 1.5 to 1 reward to risk ratio. And one of the things I'm going to start doing is every trade I get involved with, I'm going to start giving you my risk, my reward, and my entry. And I do not copy me. I really don't want you guys to copy me. Oh, Pawn hit me the slap number. Yeah. Game. Blouses. If you know, you know. Alright, guys. That's good enough. We're going to go ahead and lock in our little $30 profit there. We'll take it. Again, I don't usually trade in pre-market, but I'm going to get out there. It's a little bit early. But hey, I really like that. You want to see why I took that trade, guys? Look at this. And this is day trading futures, very similar to day trading stocks. Check out the link in the description. But 200 exponential right here, beautiful rejection. I think it'll probably keep going too. But yeah, guys, listen. When I kind of criticize people over predicting crashes, I'm not talking about anybody specifically. Maybe we are in stagflation. Like I'm not attacking anybody specifically. Like you got good traders, bad traders. I know I've made some dumb predictions in my time, and so I can't really talk. I'm just saying, if you see somebody predicting a crash, just take it with a grain of salt and understand they're not the first, they're not the last, and you know you got to really see the signs of it. And right now, I just don't see the signs of it. And I think a lot of people have just wildly over predicted them. Bad John, I know I'm supposed to get slapped if I'm supposed to get slapped if I trade pre-market. I couldn't help it though with this one. This was such a good trade. I couldn't help it. Yeah, I don't know, Matt. It's all good, brother. I mean, if you use my link, it'll show up. It's all good, dude. Oh, I was wrong about a lot of stuff, dude. I thought GameStop was a short at $4 prior to in 2020. I thought GameStop was a short at $4 in 2020. I didn't short it, right? Like I never short stuff like that. I really don't. So don't think I'm the bad guy. Don't attack me, meme community. Like I helped GameStop at the time. I streamed GameStop. What helped my channel was GameStop Squeeze. It was me and like 5 other people covering the AMC GameStop squeezes. And that's really what kind of made my channel larger was that. But I thought GameStop was a short at $4 prior to the 2021 squeeze. There's a couple other bad predictions I've made. I'm trying to think of the other ones. What are some of the worst predictions I've ever made, chat? Let me hear them. I think I've made a lot of good ones too, though. You know, but I've certainly made some bad ones. Yeah, everybody's getting mad at me for trading pre-market. I know I like it, guys. Listen, y'all have my back. I appreciate it. Thank you, guys. Shout out to you. All right, we did this poll here. We said, what do you fear more, inflation or economic weakness? It's honestly kind of 50-50 split. I personally think everybody should fear inflation, but that's just me. What hour do you usually wake up in your local time zone? I don't know, dude. Like 5. Why don't you trade pre-market? Because I lose in pre-market. I don't trade pre-market because if I don't, I'm pretty profitable. If I do, I suck, right? Like, so if I trade pre-market, my issue is this. It's a little bit different of a dynamic because I live stream. You know, we got like 1,000 people watching me, like 900 to 1,000 people. And so it's very difficult for me to start this stream up and stare at charts and not trade, right? If it was you, you'd probably do the same thing, right? You got 1,000 people watching you, you know, hundreds or thousands of people. You're tempted to take some trades, right? You don't want them to just sit there bored. But I have to recognize that my edge is not in pre-market. My edge is after the opening bell. And if I stick to that edge, I tend to do pretty well. If I get overzealous and trade early, I tend to lose money. And I'm glad we got out of this position here because, I mean, it still looks like a head and shoulders pattern. But I do think, like, the market seems to want to rebound here. We dropped a lie yesterday. So we dropped a lie yesterday, and so I could see an upside move as well, but I still like the head and shoulders pattern that we have here. I think it makes sense. We're rejecting that 200 exponential. I just think it makes sense. And then we also have the Fed minutes report today. All right, guys. Ooh. Fubo, man. Let's see if Fubo bounces back again. Fubo got bought out by Hulu. I'm still not really sure if Hulu is just going to take Fubo's lunch and combine it to Hulu, and now it's going to kind of take all the customers, and now they're going to have Hulu, or whether it's going to operate as a standalone company, but Hulu's just going to own it. I believe the latter's the more probable one, right? And y'all can correct me if I'm wrong. I really don't know that one, but I think that's accurate, right? I think it's most likely the latter is going to be the one, right? I think that makes the most sense. Yeah, it looks like I was wrong here, and that's okay. Yeah, you can try again, I'm pretty sure, Justin. Yeah, my wife and I are kind of sketched out by Hulu too, dude. Like I went to sleep one day, and I was watching this show called, this movie called A Glitch in the Matrix, right? It's a simulation theory documentary. It's super interesting. Watch it. And I was watching that and I fell asleep, right? Because anytime you throw on a nonfiction documentary or a documentary of some sort, I mean, I'm falling asleep. You know, like I can't stay up during documentaries. I just fall asleep. Hey, thank you, Matt. Appreciate it, brother. Thank you, sir. Shout out to Matt for the $10 donation. Thank you, brother. I appreciate it. But I'm watching this documentary and I fall asleep, right? I wake up in the middle of the night. It's like 4 a.m. and they've got this really weird, it was called like the Book of Blood or something like that. And it's playing these really weird things while I'm sleeping. It freaked Carol out enough to where Carol doesn't like using Hulu anymore because it kind of just played that in the middle of the night while we were all sleeping. I don't know. She just got weirded out by it. Carol's very superstitious, and so she didn't like that at all. Hey, but yeah, thank you, Matt, for the $10 donation. I appreciate it, brother. Thank you, sir. John, can you please do something to send Bitcoin and ETH higher? Thank you. Dear Helly, I can't do it. I'm sorry. Signed, John. Okay. Yeah, I'm going to be live for Fed Minutes, for sure. Yeah, Hulu is kind of expensive, but Fubo is expensive as well. Honestly, I have Fubo, Hulu, HBO Max, Amazon Prime, Netflix, and I still pay less than I would if I had Comcast or Xfinity. John is to making the video go higher first. Hey, we're trying. Over here, we're trying. Yeah, it's still $50 a month to keep trying. I think you get one reset. You get a new reset every month if you end up failing on your first one. All right, guys. John, when are you buying NVIDIA as a company? In 5 years. I'm going to put it out into the universe. In 5 years, I'm going to make enough money to buy NVIDIA as a company. Not just the stock, the entire company. I'm just going to put that into the universe here. You know. All right. Hey, shout out to Michelle. Thank you so much for the $5 Canadian. Thank you so much. Shout out to my Canadian brothers and sisters out there. I appreciate it. Thank you. Jonathan Rogers says, I refuse to pay for anything that includes ads after you pay. Good time to buy Cannabis Grow. No, I'm not really a big believer in cannabis stocks. I'm not necessarily against. I believe cannabis should be legalized and taxed. But I don't think the future looks good for any of it. I think politicians on both sides keep claiming that they're going to legalize it federally once they get elected, and then they get elected and nobody does anything for it. I'm too many anti-cannabis lobbyist groups against it. They've had opportunities where, like, the side that was really pushing for legalization had both parts of the government they needed to get it done, and then they still didn't do it, you know? So, like, I don't know, man. I just don't think it's going to be legalized anytime soon federally. Now, we've had some positive growth prospects with stuff like the Safe Banking Act, I believe it was, where, you know, now if, like, the decriminalization and the rescheduling does help it get more funding and stuff, but there's so many lobbyists against it from mostly, like, pharmaceutical industries and, you know, alcohol companies and law enforcement that it's just not super likely that it's going to be federally legalized anytime soon. Hey, thank you, Michelle. Michelle says thank you and your family for being live every day for trading. We tried. Thank you so much. Appreciate the love. Look at this move up here. Guys, look at this move up, man. We're at 330s. Or 360s, I mean. Big increase here. So my head and shoulders plan did not work. But we got out when we should have, so that's good. Look at that pop. My support level did hold right there, though. I'm going to leave that thing there for sure now. All right, we got 35 minutes until the market opens, chat. 35 minutes. We are going to trade live at the opening bell. All right, so yeah, we have unemployment numbers. day trading live now. Leave some of this up. Get rid of that too. We got the jobs data. All right, so look at this big move. Yeah, so we're going to cover the New York Open. Sorry, top 3 typers ever, fastest typers ever of all time. Gold pop it up higher than expected over the recent highs. I don't know if that's the high of the day. I'll take a look. NVIDIA is bouncing back too. It's at 142s now. All right, so we're back. Let me catch back up with the chat. Thank you, John, for making a video go up. Hey, you're welcome. Do you think MicroStrategy is a good buy? It's a way to invest in Bitcoin passively, I think. NASDAQ's pumping up, though, a little bit. Let's see what happens. That laugh screams pothead. Nah, man. I always had too much anxiety. You know, I would never. If Powell sets down, hyperinflation is right around the corner. Texas is giving medical. Yeah, I mean, it's legalized for the most part in different ways. There's a lot of nuance behind it, but yeah. Is data released today? So we have the Fed minutes report at 2 p.m. Eastern Standard Time today. So we got the Fed minutes report 2 p.m. Eastern Standard Time. We'll stream that fully live as it happens. Gold's pumping up. It's at 2670s here, chat. 2670s. Please start the natty gas reversal. Did they legalize? Mama Pawn, did they legalize it? I mean, here's the thing, right? Like, it depends on, well, yeah, in Canada. One thing that I would change about Texas, right? And everybody, like, people have, like, Texas freedom, you know, ooh, freedom, Texas. Texas is the freedom state. Everything's free here. That's just not true. You know, it's just honestly, it's a stereotype, but it's not necessarily true. There's no ballot initiatives in Texas. What that means is, like, okay, in most states, right, the public can say, hey, we want this to happen, and then they can vote on it, and if they get the majority vote, boom, it happens, right? Now, this can be good and bad because sometimes people can make emotional, brash decisions that shouldn't happen anyway. But for Texas to preach the freedom state, and then there's no ballot initiatives, you basically have to have some old politician decide for you, you know, kind of, I disagree with that. Not even talking about what we were talking about before, but just in general, I believe there should be ballot initiatives here, because I believe, like, what most people want should be what happens, and we just don't have that. AMD is going head to head with NVIDIA in AI-backed drug discovery with news of a partnership and investment in startup Absi Corp. ABSI is down almost 9%. Look at it gapping up today. It's at almost $4 a share now. Where's AMD at today? Did AMD dip some? Let me see. AMD's down. Very weak. All right, so we kind of got a double top here on the NASDAQ that we're watching for. Still got 30 minutes left. Oh, interesting. Mama Pawn. Yeah, and I've said this once, I'll say it again. Most people here know my stance on cannabis. Like, it's objectively less harmful than alcohol, and we sell alcohol at gas stations, right? And so I think, like, there needs to be a reasonable, even standard of legalization of things that are allowed versus not allowed. Because when you got something that's obviously and objectively more toxic, more harmful to people, and it's like alcohol, which is terrible for people, right? Almost everywhere you look, it's bad. The inebriation's worse. Physical withdrawal symptoms are exponentially worse. The effects on the body are so much worse, right? They can cause dementia, all this bad stuff from alcohol, but it's legalized. I just think there needs to be an even standard. Because I think really the big issue for most people across the country is alcohol. I'm not against it. Drink if you want to drink. I'm not judging you if you drink either. Just, yeah. AMD that got downgraded by HSBC Bank. Yeah, it's down a little bit. It's at 125. I think the microchip sector overall is down after risks of quantum computing obsolescence. Meta and changes reportedly threaten telehealth weight loss boom. Meta is limiting how advertisers can use health financial data to target ads according to the information. Yeah, jobless claims again showed up lower than expected at 201 versus 218. MicroStrategy and Stackit form a strategic partnership to deliver a sovereign data cloud for AI-powered business intelligence. That's interesting. No, the prohibition of anything doesn't work, right? To be honest, like, people are going to consume it regardless. The only thing the prohibition of anything causes is people to go to sketchy markets, you know? Like, prohibiting something is just going to make people go to other means to get it, and it jeopardizes people in a more heavy way versus legalizing it, regulating it, and taxing it. I mean, that's very clear with any type of historical prohibition on anything ever. No, I don't think you should legalize all these hard stuff, but yeah. Moderation, yeah. How do you show all your entries and exits on Quant Tower? I'm not sure. I don't use Quant Tower anymore. It's been a while. Yeah, I'm not even talking about benefits, Enzo. You know, I'm not talking about benefits of anything. Smoking anything's bad for you, for sure, 100%. You know, I'm talking about just logic, having an even standard. If cigarettes are allowed, they harm so many more people. You know, if alcohol's allowed, it harms so many more people. Much more dangerous. We're talking about having an even standard of things that are allowed versus not allowed. You know, of course, it's not good for you to smoke anything. And again, I'm not really, like, I was too anxious as a person to do that. I'm just talking about the business aspects of it, because, like, you have stocks like CGC, right? And these stocks have tons of money and investors in them. You know, Tilray, like, you can kind of see the long-term trends of these things, though, as people realize that, like, legalization's not happening anytime soon. Like, look at the long-term trends of this. Like back here, like look, just long-term downtrend. Tilray, same thing. Long-term downtrend is now at $1.45 a share. I think people just realize like you gotta be skeptical of these companies. They might be good shorts, honestly, but you know, my logic, my luck would be thinking that and then taking it and then having something crazy happen. So how is quantum computing obsolete when they just said it reaches into the multiverses? Quantum computing is not obsolete. Quantum computing might render conventional and classic microchips obsolete deep into the future. And that's bad for NVIDIA. So I'm not saying quantum is going to be obsolete. I'm saying it might render microchips obsolete. And obviously that's not good for NVIDIA, you know, AMD. Yeah. Yeah, I mean, I certainly don't think that either. And so, you know. That's not going to happen, John. Normal PCs are far better for many things, and that will stay true even when quantum is solved. Yeah, right now, for sure. But into the future, if quantum becomes more efficient and useful in those regards, then I think there's a chance. I'm not saying it's going to happen. I'm saying the microchip sector overall is down. Not just AMD, right? NVIDIA's down. A lot of stuff's down overnight because of the JOLTS report weakness yesterday. A lot of corrections happened over the last 24 hours. Flying cars might render airplanes. Nah, bro. I think one is noticeably more probable, and it's not flying cars. I think quantum computing becoming more efficient. Like, one of the things that happens here, guys, is that efficiency breeds growth, right? And so quantum computing is simply more efficient at this point in terms of solving problems than classic computers, right? But they're super fragile. They glitch a lot, they break a lot, and it's super expensive. But over time, it's it's plausible that all that stuff, all those things are like solvable, you know? Like you can make quantum computing, it's possible for them to make quantum computing less fragile, more efficient, more useful for all those different things. Mining Bitcoin especially, other stuff like that. And I think if it's possible, it'll happen. It just depends on when, and that's a big if. I don't know exactly when it's going to happen, but yeah. Wait, so you don't see flying cars in 500 years? In 500 years, absolutely, we're going to have flying cars. We'll probably have some other weird stuff in 500 years, to be completely honest. 500 years, that's some time. You know, that's like comparable to the 1500s right now, bro. Like, of course, of course, 1600s, but of course, we're gonna have flying cars by then for sure. I don't know how they're gonna do it, but yeah, 500 years is so long from now that the tech that they're gonna have in 500 years is gonna be absolutely ridiculous to us. It'd be like showing somebody 500 years ago a smartphone or a tablet or a TV. They would freak out. They wouldn't even know how to process it. So. All right, guys, we got 20 minutes. All right, guys. So we already we're slightly green on the day already here, chat. So we're slightly green already. Let's see if we get some better action here. We got the Fed minutes report today as well. All right, chat. Yeah, we are down at 360s right now, 360s. Yeah, dude, I grew up before the internet, right? So when I grew up in the 90s. And so when I grew up, we didn't have computers really like that until I was like I saw computers rise up. And so I remember a time before computers. I remember a time before cell phones. I remember a time before high-speed internet. And so, yeah, just in my lifetime, I've seen crazy technological advancements. And so you have to extrapolate that over a 500-year period to kind of get the point of what we're all saying, which is craziness. When you extrapolate that type of technological advancements, and to be fair, it's not going to really move at the same pace always. Like, you got big booms and then quiet periods and big booms and quiet periods. But 500 years, man, we're going to have crazy stuff. Yeah. My mom picks up the phone, kicks me off the internet. Mom, what the heck? You know? Yeah. One of the reasons I got my kids laptops for Christmas, one of the reasons I did was because that helped me so much as a child. Like, develop things, learn how to build stuff, and gave me an entrepreneurial spirit, like the creativity that I could have on the internet. Again, I've said this 1,000 times, but I think it's important to reinforce how useful this is if you have kids. Like, teach them how to use the internet. You know, teach them how to build stuff. Let them build things, right? Like, I remember building, like, a GeoCities website. It was, like, a Legend of Zelda, Ocarina of Time, and Majora's Mask walkthrough website. And I actually got some views on it when I was, like, 12. You know, like, I had a computer in my room, and I just kind of learned how to use it myself without parents. Like, my parents never really showed me how to use it or anything like that. And so, you know, I think it's important for growth and just development, entrepreneurial spirit, to teach your kids how to build stuff on the internet. Within reason, right? Within reason. But yeah. Yeah, we're going to stream FOMC minutes. Yeah, we're going to stream the whole thing. Yeah, I remember being in the early AOL chat rooms when I was young, man. You know, I had my little internet girlfriend, probably some 50-year-old named Steve, you know what I mean, realistically. I was never dumb enough to give them too much information, though, you know. And I remember my parents would catch me there and, like, yell at me if I was in it. Those were exciting times, bro. You could, like a chat room was such a new thing on the internet, that, like, being able to communicate directly with different people from different places in the world was, like, a very unique thing at the time. Yeah, it was fun. Super slow. I remember when my mom got DSL, right, which was, like, a step up from classical connection, like a regular connection, a dial-up connection. I remember when my mom got DSL, which was, you know, faster internet. It was a step under high speed, but it was definitely high speed for the time. And I remember using it, and it would be so slow compared to modern age, but to me it was so fast. I remember getting that internet and like being super excited to use it. I remember also, like, I played The Sims Online, and there used to be a game called The Sims Online, and it was The Sims, but it was a MMO Sims game where you could, like, build your own house and invite people over and, like, do all this cool stuff, and you could have, like, businesses on The Sims. I remember I had a casino, and you could set the odds for your slot machines. You could set the odds for them on the Sims game and invite people to your casino and run it like a business. It was very cool. Like, I still wish they had something like that, because that taught me a lot of different things, surprisingly, about, like, business, to be honest. Because if you set the odds too bad on the machine, nobody would ever come there. But if you set them too good, you'd lose money, right? So the sweet spot was right in the middle. I'd hold competitions and giveaways and, like, all this stuff to get people's foot in the door. It was actually a very entrepreneurial game. They ended up shutting it down. I don't know what happened to it. Like, 20 years ago, they shut it down. But I remember playing that thing and loving it, just because you could be entrepreneurial in there. It was fun. I don't know what they have for The Sims now. It's been so long since I played that. Is that where you made your first million? I didn't make any real money from it. This was all fake Sims money. But I had a freaking mansion as a Sims house, you know. The data's already out. We got the opening bell in 12 minutes, guys. The data's already out, though. We had jobless claims lower than expected, stronger economy than expected. We had prelim NFP data weaker than expected, showing a weaker economy than expected. So kind of mixed data. But I would argue Friday's NFP report is going to be bigger than all this stuff. So Friday's report is going to be big. It's something you want to pay attention to. Yeah, I remember LimeWire and Napster. Yeah, I remember downloading. I downloaded the Star Wars prequels before they came out in theaters on LimeWire, and got in a little trouble for it. Fun times. AMD at 125s. Yeah, I remember Kaza. I remember Kaza too. I was a huge nerd, guys. I sat at my computer at home, but it was fun. Yeah, I've said this before, but the closer we get, and the market's just consolidating, still kind of looks like a head and shoulders pattern, but we've got this big support level right underneath us. I remember, here's NVIDIA on the bottom. You know, the closer we get to a Ready Player One scenario, the more weirded out I am by like simulation theory, to be honest. Because I've said this before, and it's kind of like it messes with your head, but you know, simulation theory, if it's statistically possible for us to one day create a simulation that is as real as what we currently see, then it's much more statistically possible that we're already in that simulation. You know, and the real question goes like this, right? Like, imagine creating a video game, and your video game players, like the people that are in your video game, at this point, AI is to a point where it's smart enough where it can start to kind of think for itself a little bit, right? Now, extrapolate that over the next 50 years. Think about how good AI is going to be. And so if you're creating a video game and you give it an AI, you know, you give it an AI personality, and they get smart enough to create their own video games in that video game and create their own virtual reality beings, theorize how many levels deep could that go, right? And so that's the weirdest type of look at it. It's super deep. I'm not saying I believe that, but I do think it messes with your head a little bit. And I think, you know, imagine how many levels deep we could be in if that was true. It's a weird thought. It's a super weird concept, you know, but I think it's super interesting as well. And who knows, man? Let me see back there. Let me see back. 13th floor. It's a movie? Let me see. Oh, it's about the same thing. Ah, see, I've never seen the 13th floor. Is it good? Seems a lot like what we're currently in. Kind of a Matrix spinoff. I wonder if this is what inspired the Wachowski siblings. All right, anyways, guys, so we're still under that 200 exponential. You can kind of see that level test a couple times. So we're watching that 200 exponential. My hands are off. We're up about $20 right now, I think. Still got 8 minutes left until the market opens. So we'll see if we get anything good. Yeah, but when you think about Sam says, so there are There are circa 10 to the 70th power fundamental particles in the universe. You would need a computer with more particles than that to simulate the entire universe. Not so likely, in my expert opinion. True, but wouldn't you imagine that, like, if we are in something like that, that there could be some type of like, what's the best word for it? There's some type of mirroring effect to make it seem like it's more than it is or whatever. I don't know. I think there could be different ways to get around that. I also think using AI systems, you could just build algorithms that can continue to build off the last ones automatically. And I think that's possible too, you know, but I don't know. Yeah, we're not gonna spam other. Who said it? Where'd they go? Wait, where'd they go? Didn't somebody just spam? Hey, go invest. Oh, there they are. Yeah, Trip. Please don't spam sketchy, unheard of companies. Sorry, bro. Yeah, we got 6 minutes left. 5 minutes, really. 5.5. Very flat right now, though. Look at the market action in the NASDAQ. Very choppy. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Like, we're talking about simulation and all this different stuff. You might be sitting here like, John, talk about the market, bro. What the heck? But this is the market right now. Like, look at this. It's so choppy. It hasn't moved at all in the last 10 minutes straight. So, you know, we're trying to do stuff, but I'm going to wait until the opening bell, hopefully. Right, exactly. Like, we can mirror the rendering. We could find different workarounds for that, I think, for 100%. The numbers were mixed. The prelim NFP data was weaker. Jobless claims unemployment was stronger for the economy in both contexts. All right, guys. Yeah, we got the opening bell soon. Let's do this. All right, guys, here we go. Oh, man. All right, guys. We got the Fed minutes report today as well. Let's see if we get anything good. I'm ready. AMD very flat, NVIDIA very flat. Markets are kind of choppy and flat here. We got 3 minutes left into the open. Hit the like button next to the play button. Make sure you're fully caught up on stream chat. I appreciate it. Thanks so much. All right, guys. Opening bell soon. AMD popping up a little bit. We do have some strength. There's NVIDIA making a move too. Google's kind of 194s. I guess the question is it still time to buy the dip, or are you guys waiting to buy more? We're green on the day. We'll see if we can get another green day in the books. Again, we're going to be day trading on Topstep's funded account program today, where they give you a demo, test your skill with it. It's a great way to limit your risk and get started for cheap. Base one's $49. Comes with real-time data. If you pass the test, they give you a 50K demo. You got to make 3K without losing 2K. You pass that 50K demo challenge, making 3K without losing 2K. They fund you 50K, 90% split. You get to keep your first 10K in profit. You fail, you're only out $49. Teaches you how to trade. They paid out over almost $200 million since 2020. They fund thousands of traders. It's a beautiful middle ground of pressure. No PDT rule. And if you use Topstep X, 0 commission. This is one of the top 3 greatest plugs ever in the world. Understand I'm biased. I get paid by them. No PDT rule in futures, though. And you can day trade short, buy market, sell market. Very similar to day trading stocks. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Not an investment professional. Do not copy me. And some of these are affiliate links. I am biased because I get paid by them. So, but genuinely useful for traders, in my opinion. Here we go, guys. We got about 20 seconds into the opening bell. Again, if you want to trade with me, you can check out the link in the description or in the chat right now. All right, let's do this. Let's see if we can make some money. We're going for our 4th green day in a row, chat. I think it's our 4th. Let me see. I think it's our 4th green day in a row. My headphones are cutting out. You should have some battery here. Let me try to turn these things on. All right, they're open at the opening bell. We'll be all right. Cancel. All right, so there's the opening bell, chat. I think I'll honestly be good here for the next 30 minutes. AMD's popping up a little bit here, though. All right, so negative market reactions right now here, chat. Negative reactions. We're going to wait at least 5 minutes. We have a very choppy range, so we'll see if we can break that range and then attack something here, but we got to wait. NVIDIA breaking down a little bit at the opening bell at 140s now. I'm going to sit back and chill for a little bit. Looking at our poll numbers, we did ask people, or do you fear inflation or recession more? Basically, 56% say inflation, and I agree. I fear inflation much more than economic weakness at this point in time. AMD breaking down some. We'll look at Apple as well. I think we got to look at like Tesla. I'm seeing weakness in Apple, strength in Tesla. So kind of a mixed day so far. There's Google. We could put up like Tesla here. I like this. It's kind of strong to me, but I got to let at least a couple minutes pass first. Remember, every trade I get in, we're going to give you guys our profit and loss levels. Yeah, it looks bullish right now, though. This looks strong. I'm going to buy this here. It's a little bit early. Profit target is up at the top right here at 367s. Risk is right about here. And we'll give it one more second, but we're out. Flat on the day. Probably a little bit too early to day trade. We'll give it a little bit more time. See, I like Tesla's strength here, but I do not like Apple giving it back. Apple broke down. So did NVIDIA here. Look at Tesla pop, though. Tesla at 396s. It's a very strong move here. Again, I gotta let some time pass, though. Look at that weakness happen. I'm going to buy this now. All right, so we're in. Risk level is about 330s. 330s. Reward target is about 360s. We tap at our risk level. We just bounce directly off of it. We're close to it, but I'm probably going to cut it right there. Yep. So we're down about 30 bucks on the day now. Since we lost a couple times in the first 4 minutes, I'm going to wait. I was hoping we'd see a rebound here on NVIDIA. We're right at the 200 exponential, but it's just looking really weak along with Apple. And if we break underneath this range, we're going to start testing the bottom. So Tesla testing highs of the day now, though, again at 397s. Just broke it for a split second at least. What's up, Chef? So basically, if your profit target mat is 3K, you can only make 1,500 per day. Ah, dude, my long would have worked here too. Just kind of ripped up a little bit fast, so I mean, it's all good. We were correct, just kind of got sparked out of it. Look, and you can kind of see we made hundreds yesterday, so. Tesla's trying to go for 400 here. See, there goes NVIDIA back up too. Kind of a choppy range at this point, though, chat. So we got a triple top up here. All right, so now we're 5 minutes at the open. This is where our best trading is usually going to come in, but depends on what NVIDIA does right here. Kind of looks weak. Yep. So flat. Apple looks weak too. Yeah. I'll try buying this here too. So we just jumped in. We are looking at a risk level of 345s. Reward target about up there. That's the 200 exponential, but it will stick to it, but haven't really done super well the last couple trades. I was hoping we'd get an NVIDIA pop back up. We kind of am now. Well, that's better. But I don't know if I like this necessarily. Again, we're going to stick to our reward target, hoping NVIDIA might bounce. So we're popping back up there too. I'm going to say I could add to this. Again, 345 is my risk. And our reward target's up here at about the top of this range at about 380s. Currently flat. Try to be patient with it, but I don't want to see NVIDIA fall anymore, to be honest. And Apple's testing lows too. Yeah, I'm gonna have to cut it too. See, we're just not getting good trades. Taking these range bound trades. I'm My hands are off for now. I think we're like 50 bucks on the day, so it's not the worst, but we're just getting chopped out right now. And NVIDIA's got really a slight range. I'm wondering why. I mean, maybe it's the Fed minutes report coming out later. Yeah, I mean, we just have such choppiness today. If we break under this range, maybe we'll attack something, but my hands are kind of off for now. It's not doing great. And honestly, I haven't been doing well since the open most days. We did great yesterday. We made $200 yesterday. But at the open, we got beat up again. And so we've been getting beat up at the open. I'm going to wait a little while, though. Maybe wait until 8:45, see if we get some better edge. And I'm just going to chill until then, I think. My risk level actually confirmed here, though. So at least my risk level was good because we broke down as soon as we broke underneath that risk level. So looking for a silver lining. But we'll be all right. Yeah, look at Tesla come down. See, Apple's weak too. See, Tesla just hit that previous close. See if we can find a short. Let me look at some levels here real quick. So we have this spot right here. That's definitely one. This is definitely one right here too. So we bounce at this level. What's underneath here? We got one right about there. Okay, so we did bounce right at that level we drew. A lot of resistance above us here, though. And I see some weakness and stuff, too, like Tesla specifically. All right, so we're going to take 2 contracts here. See if we can... I'm going to immediately get out of one down there. And we'll add another piece to this if we go back up. But all right, so we're out. We just made about 20-30 bucks. We'll take it. Playing off these levels that we built. I do think we're going to retrace this bottom, though. We look weak everywhere else. So we get back up there. I will short again. And then maybe add a little piece to this, too. I just made another little $15 there based off of my level. And then we got out. We got this level coming up here, too. Oh, I was going to short it. Look at that. Ah, man. I was going to short it, too, man. A little bummed, but it's all good. Just slightly missed it, but look at that level of rejection. I don't know if I like it if we completely get back up there too. I'm seeing some rebounds and other stuff. Tesla, Apple, NVIDIA. I see some rebounds and stuff. See, now we're at the 200 exponential. I'm a little late in this short. I don't like it as much now. We'll try one contract here. Or 2 more, I mean. I don't like that pop back up. Yeah, lost about 60 there. Still getting chopped out. I like the 200 EMA rejection, but that green candle just came out of nowhere. All right, let's see what NVIDIA does. NVIDIA's right at 142s. We got one contract here. I typically like these retracements, but don't always perfectly work. All right, so just made a little bit back. Rejecting at that 200 exponential. I think my headphones just died, but as long as y'all can hear the music, it's all good. I'm gonna buy this dip. See if we could retrace back some quickly here. Man, we are not doing well today. Our levels are working, but I'm gonna take half off at the top so that my loss is pretty small here. And I can always play with this again, which I will. 2 contracts now. There we go. There we go. All right, so we just made about 50 on that trade. Kind of made our losses back from the last one. So kind of flat, I think, on the day, to be honest here, man. A little choppy, a little sideways. But hey, let me see. Yeah, we're small loss on the day. Still working at it though, guys. So Fed minutes report does come out today. How's the music sound right now? I do like a short now here, but it depends on what NVIDIA does. Let's wait. I'm gonna wait. To be honest, we're very sideways except for Tesla, which is slightly green. Since the opening bell, that is. I'm gonna wait. You know, I think the price action is kind of flat on the day. It's just kind of up and down. Like, look, here's the NASDAQ. Up and down and up. You know, that's what we've done so far. Now, we do see some optimistic things like NVIDIA heading back up over 200 exponential volume weighted average price level. So that's looking better, but I don't know if it looks good necessarily. I think it still looks pretty sideways. Yeah, I'm going to try to set my max loss for $125 or so today. We made 200 yesterday, so that max loss will help us lock in something. But looking weak. I'm gonna buy this dip. Entry is down here. Risk level is about 324s. Reward target is up there at about 370s. I'm gonna choose not to add to this one, I think, here. There's 324s. Yeah, just a huge red candle. Not huge. I'm probably embellishing that a little bit, but let me see where we're at. We don't have too much more here before we hit our perceived max loss on the day. McDonald's sign on Tesla. So choppy. I think we'll yeah, no, I'm okay with losing. Again, we made hundreds yesterday, so we're not going to make money every day, and I think the market's just not really playing with us today. We got the Fed minutes report later on. We'll be streaming that live when it happens, and so just be ready. Look at that candle. Wow. It would show strength, but watching NVIDIA. Today's not the best day. I don't know if the Fed minutes will be hawkish or dovish. Really don't know. I'm going to buy this. It's kind of a risky buy, and we'll probably add to it, and this will be our last position if we pull down some. Hoping we'll get like a pop and a retest of highs, but all right, we got 2 contracts now. Kind of flat. We get a little pop up there. Kind of up there here. All right, we ended up taking half off, but it actually gave us a loss in the trade. That's weird. I'm gonna add right back. See if I can get my money back. There we go. All right, just locked in $15. Again, we will try adding to this if we can. 2 contracts now. Whoa. We are out. Just made about 100 there on that trade. What a candle. I'll take it. We'll do both, Jeff. We'll use a couple different ways to do it, but we'll do both. Are we green now? Let me see. Probably kind of close to it. Okay, we're basically completely flat. I don't know if I should celebrate and cut the stream. Now we're flat on the day or what. But NVIDIA looks like it wants to creep up and break highs, but it also could reject at the top of the range and continue the choppy sideways neutral pattern here. Any chance of a relief rally? Yeah, January effect rally. I don't know. Maybe. Yeah, we're at the top of the range. I'm worried NVIDIA is going to reject this top and come back down. All right, we're at the top of the range. Again, I'm worried we're going to reject the top and then come back down. And if that's the case, we're just going to sit out for now and just wait. Top of the range is about right here. Yeah, I mean, the range is right here. The range I'm looking at least is here. Right. Yeah, and exactly what I said happened. I should have shorted it. I told you guys I was worried we'd reject that top of the range And look at that rejection. I showed you guys where the range was, and boom, literally exactly off of that level. This is why I'm saying, like, my hands are off. We're too choppy right now to ride momentum. Yeah, we're too choppy. I don't really, I mean, I read that perfectly, but yeah, I don't think I'm going to mess with this. We got the Fed minutes later. We'll be here bright and early in a couple hours anyway. Something that's generally helped my trading a distinct amount is looking at levels. It's just all about levels for me, right? So I look at levels and I try to find good risk reward situations that also could have good accuracy. It sounds simple. Sometimes simplicity is key, to be honest. I look at levels. I look at levels. I try to read the flow of the price action around those levels, and I try to find pockets of good risk reward levels, right? So like if I can have a good risk, good reward, small risk, good reward target, I'll attack it, especially if I think it's in the same trend that we're currently in or something like that. And even if I'm wrong, it's a plus EV long-term strategy, which is plus EV is a poker term or a term, not even poker, but it stands for plus expected value, meaning if I continue that type of logic long-term, it should make me money long-term, regardless of short-term outcomes. So yeah, that's me right now. Again, we're too choppy. Look, we bounced at the lows, so this is why I watch levels over everything, because levels will guide you sometimes. And again, with that said, though, I'm probably just going to step away for now. We'll be back later on. Again, if you want to check out Topstep and try to trade some of these levels with me on Topstep, link is in the description. I'll put the link up one more time here without a shameless plug this time. I mean, it's a plug, but there's the link if you want to check it out. Day trade with me. On Topstep X, there's zero commission. That's my big edge. Almost no fees and zero commission. So it's a great way to learn how to day trade without risking too much. They give you a demo, test your skill. If you pass it, they fund you. If you fail it, you only lose the monthly subscription, which is a similar cost to like a demo account with real-time data. So the value's there. No PDT roll in futures. Very similar to day trading stocks. Understand all this stuff right here. Top 3 worst trader of all time. Don't copy me. I do trade off stream. You're not going to see all my trades. I don't even claim to be profitable or anything like that. Understand CFDC 4.41 hypothetical or simulated performance have limitations, guys. Understand all this stuff. I'm definitely biased because they're an affiliate of mine, so I'm biased. But hey, I love you all. You have a great day. I'll be back in a couple hours. I'll see you guys then. Y'all be safe. Market might be flat because of Fed minutes today, and we'll stream it in a couple hours. So be ready. Hit the subscribe button. Hit the notification bell, and I'll see you guys in a couple hours. Later, chat.